Hello, welcome to Advanced Taxation class. This is actually a build-up to the taxation course that we did, and it's more of a computation. And I would want us to go through it. It's actually a 10-module course, and we will take it one after the other. And today we'll be talking or having the advanced principles and theories of taxation, the principles and the theories of taxation. And in doing that, we will look into a review of fundamental tax principles. It will be a review because we've dealt with it in the taxation course. And also we'll look into theories of taxation. We will look into modern tax reform and global tax trends. We'll look into principles of equity, neutrality, and simplicity in taxation. And we also look into the role of taxation in economic stability and redistribution. Taxation has evolved far beyond the basic obligation of raising revenue for government expenditure, becoming a complex instrument for shaping economic behavior, redistributing wealth, and influencing the national and global financial system. And in advanced taxation, the study extends into deeper conceptual, theoretical, and strategic dimension that underpin modern tax policy and practice. And to look at this, we'll firstly look into the pillars of good tax system, just like I've said. And when we talk about the pillars, they are the fundamental principles of a good tax system. What is actually expected of a good tax system? We'll talk about equity, which is fair distribution of tax burden, and it can be horizontal or vertical. We also have a principle of certainty, which talks about the clarity, the predictability of tax obligation, and also a good tax system must have a convenience principle. It must showcase a convenience principle, which talks about easy payment for the taxpayers. Another is the economic principle. It deals with low cost of collection relative to the revenue that is being generated. And this is more of, from the government side. And we also have neutrality, which talks about taxes should not distort economic decisions. And simplicity is actually about it must be easy to understand and comply with. And also for a good tax system, it must be flexible. And that is, it must be able to adapt to economic changes. And also, it must also showcase productivity, which means generating of sufficient revenue for the government. We have the core theories of taxation, and this deals with why do we tax. The first is the benefit principle. The benefit principle. And when we talk about this, it's actually talking about the payment of tax in proportion to the benefits that is being received from public services. It is a payment of tax in proportion to the benefits that is being received from public services. An example of this is road tolls, and user fee for public services and the likes. And the limitation of this is that it's difficult to apply to general public goods like national defense. And we have another theory, which is the ability to pay principle. The ability to pay principle. And for this, it actually talks about tax burden should be based on one's economic capacity. And the foundation is built on the progressive taxation, that is, higher income should be equal to higher tax rate. And the goal is to promote social justice and redistribution of wealth. The third theory is the economic efficiency theory. And when we talk about this, it deals or stipulates that taxes should raise revenue with minimal distortion of economic behavior. And the goal is to minimize deadweight loss or excess burden. And practically, it actually means favoring broad-based neutral taxes over complex and distortionary ones. And also in practice, modern tax system blends all these three theories, leaning more heavily on ability to pay and efficiency. Let us talk about equity, neutrality, and simplicity. And we've also looked briefly into it in the first part of the course. And for this equity, which deals with fairness, is we see the advantage of equity, that is to promote social justice and reduce inequality. However, it has its own disadvantage, and it can discourage work or saving, and that is which reduces efficiency. And neutrality is actually dealing with the efficiency aspect, and the advantage of this is that it promotes economic growth and minimize market distortion. However, it has a disadvantage of being regressive. It can be regressive. That is, example of this is VAT, which hurts the poor the more. And the last is simplicity, and this talks about the administrability. And the advantage of this is that it lowers compliance cost and reduce evasion. However, the simplification can sometimes reduce targeted equity measures, and policy makers must, however, constantly balance these three often competing goals. It must be balanced together to be able to have the perfect so that one will not actually suffer for the on behalf of the other. Now we move to the taxation as a tool for economic stability. And when we talk about that, fiscal policy is one major tool. And this is taxes can be used to manage the business cycle. And you can, in terms of recession, cut taxes to boost disposable income and stimulate demand. And in terms of inflation or boom, the government raises tax to reduce spendings and cool the economy. And we also have the automatic stabilizers. The first is features that work without new laws. And when we talk about this, we talk about progressive income tax. And in boom, tax revenue automatically rise, curbing inflation. And in recession, tax burden automatically falls, supporting spendings. And taxation as a tool for redistribution. And then the goal of this is to reduce income and wealth inequality. And the primary mechanism which is used is one, the progressive income tax, which is higher earner pay a larger share. And another mechanism is the wealth-based taxes, and this deals with capital gain tax, inheritance tax, net wealth tax. And another is funding social program. And this mechanism actually deals with tax revenue fund, healthcare, education, and cash transfer for the poor. And the result of this is a more equitable society and investment in human capital. And looking at the modern driver of tax reform, what are the things that actually drives modern reform, tax reform? The first is globalization. Also, we have digitalization, where it talks about how to tax businesses with no physical presence. Another is rising inequality, and this deals with public demands for fair tax system. And another is revenue need, where it talks about funding infrastructure, health, and climate initiative. And the last one, which is the driver of tax reform, is international standards like the OECD, BEPS project and the global minimum tax. We have key global tax trends that are coming, and the first is the BEPS, which is the base erosion and profit shifting, and OECD project to stop the MNEs from shifting profits to low tax jurisdiction. And we also have the digital taxation, where new rules like Pillar 1 to tax the MNEs in market jurisdiction where consumer have. And another is the global minimum tax, which is the Pillar 2, and it's another global tax trend. And a 15% minimum corporate tax to end the race of the bottom is being used. And lastly, transparency. And this talks about automatic exchange of information and country by country reporting. In conclusion, tax system design is a balance of principle, theories, and practical goals. And the core principle, like the equity, neutrality, simplicity, provides a framework for evaluation. Theories explain the why behind tax policy choices, and taxation is a powerful tool for stabilizing economies and redistributing income. And globalization and digitalization are forcing continuous and coordinated tax reform worldwide. We've come to the end of the class. Thank you.